Hey guys, and welcome to the Working Money Channel. I want to start this off by saying, guys, I am giving away 2 Ledger Nanos on April 1st. We have the entire month of March, though, and the goal is to reach 70,000 subscribers by then. So if you're not subscribed yet, do subscribe to the channel. Also, giving a thumbs up to the video is a great free way to support the channel as well. Let me get into it, though, guys. This is Bitcoin on the hourly, and trading right now at about $48,800. Over the last day or so, we have seen a bit of an upward trajectory for the crypto market, and Bitcoin obviously leading that trend. I'll put a Fibonacci on here. You guys can see we are coming back up to this level here, the 0.382, and Bitcoin kind of hovering here. Where are we going to go from here? Well, ultimately, we do have to break some of these lower highs. So this over the last several days now, we have seen lower highs for Bitcoin and lower lows for Bitcoin. So what is going to happen with this trend now? Are we going to see that reversal? Ultimately, if we do come down and we make a lower low, we could still see Bitcoin go to the downside. However, if we find some support down and around here and Bitcoin kind of moves back up from there, making a new higher high, then that's a good indication that the market will continue to move upward. Of course, XRP not faring so well compared to other cryptocurrencies, but guys, we've seen this in the past for XRP. It doesn't actually get me too worried. Right now, XRP just hugging that 0.236 level. You can see that here. And good news on both the Bitcoin and the XRP chart, as I'm noticing on the hourly time frame, this inverted head and shoulders. So I am hoping we are going to move up. I'm not holding my breath, though. You know, I'm prepared for a continual downtrend. Of course, we have seen deep corrections for Bitcoin in the past during previous bull runs. Some good news I like to look at for the XRP chart in particular is this on the weekly, guys. If we look at the weekly time frame, we can see XRP still above that weekly close of about 34.5 to 35 cents. We had seen old resistance back in early 2020. You can see it here. And even back from May 2017, we can see that there was resistance formed there. So if the weekly can hold above that level, I still think that overall we are bullish. Of course, that seems obvious, I would think about now, considering the whole market is bullish. And some are suggesting, based on the stock to flow model, that Bitcoin price could go as high as $200,000. And I believe that they're suggesting that this could happen by the end of 2021. So the other day we heard about, Bitcoin. Mike Novogratz was saying Bitcoin could reach 100,000 by the end of the year. But this stock to flow model forecasts the long-term price trend of Bitcoin by taking 2 main factors into account, namely the amount of Bitcoin in existence, the stock, against the amount of newly mined coins entering the market. So Bitcoin is on track for 200,000 based on the S2F model. So according to this, the price of Bitcoin should be hovering at around $36,851 in order for the stock to flow model to be on track. Due to the recent bull cycle and Bitcoin's strong momentum, we are now upwards of 49,000, and we saw that on the price chart for Bitcoin. We are trading at about that price currently. So this article fairly recent, just published about 27 minutes ago as of the recording of this video at least. And so here are some visuals for you guys. The stock to flow multiple, we got here the Bitcoin daily stock to flow multiple. You guys can see here it is on the 14-day moving average, and we got it here on the 100-day moving average. Guys, I'll link this tweet in the description. This coming from S2F Multiple here on Twitter. I guess this account specifically talks about the stock to flow model. So here's Bitcoin daily stock to flow and price, and I think this is probably the one that's most interesting. You can see over the years Bitcoin price has followed this model, and they're basically just kind of adding an extension to this. We can see that this gray line represents the stock to flow, and the red line represents daily price. So of course you can recognize that that red line would represent Bitcoin price, and over the grand scheme of things, we've been following this trend pretty closely. Now, if you look up here, this line here would represent $100,000, and it is indeed suggesting that we could even get to that by mid-2021, or just a little after mid-2021, so the summer of 2021 into 2022, and of course, this based on supply and demand for cryptocurrency in the ecosystem. So I like going back to the stock and flow model every now and then to see what's going on. Interesting to see. And coincidentally, or not so coincidentally enough, this all coming as Goldman Sachs restarts their crypto cryptocurrency desk amid a Bitcoin boom. So this coming from XRP photographer here on Twitter. Goldman Sachs Group has restarted its cryptocurrency trading desk and will be dealing Bitcoin futures and non-deliverable forwards for clients from next week. A person familiar with the matter said the team will sit within the U.S. Bank's global market division. The person said the desk is part of Goldman Sachs' activity within the fast-growing digital asset sector, which also includes projects involving blockchain technology and central bank digital currency. And from my understanding, this was actually closed for a while, and I think part of the reason that they decided to restart it was because of the growing regulatory clarity that we're seeing, at least for Bitcoin in this market. So that's all great news for institutional traders. Of course, we know the institutions and the institutional money is really what's going to get this crypto market up to those new heights, right? So far, we're still trading in a relatively retail market. I mean, it has changed, obviously, since 2017. There's definitely more institutional interest than there was back then, but there still isn't the numbers. And, I think that this is what's really going to push Bitcoin into the stratosphere, and eventually the rest of the crypto market will move along with it. We also saw this from DJ Peter Vass. New York Attorney General warns the cryptocurrency industry, you better play by the rules or we will shut you down. So along those same lines, with regards to regulation within this sector, too often greedy industry players take unnecessary risks with investors' money, New York attorney Letitia James said. So she sent a blistering warning to investors and industry members on Monday about cryptocurrency specifically. We're sending a clear message to the entire industry that you either play by the rules or we will shut you down. The warning from James, which addressed individual investors and crypto industry members, comes amid a major start to 2021 for digital assets like Bitcoin. The cryptocurrency surged to new all-time highs. We know that. Some more information about the history there. James told members of the crypto industry in New York they must be registered with the Office of the Attorney General's Investor Protection Bureau. Parties that are obliged to register but fail to do so are subject to civil and criminal enforcement. This is what she said in the statement. Monday's alert comes 2 weeks after the Attorney General filed a lawsuit against CoinSeed, a trading platform for digital currencies. James alleged that CoinSeed was operating a virtual currency trading business in New York, functioning as an unregistered broker-dealer for more than 3 years while collecting over $1 million in investor assets. So 2021 becoming the year where, whether they like it or not, government officials are tending to realize that they have to crack down on this because it is starting to get out of hand. We have been seeing new rules come into place. We have been seeing some regulatory clarity. I mean, I guess at some levels of government. And of course, today, guys, is March the 2nd. So a big day for Gary Gensler. BANKXRP here posting this. Gary Gensler's opening statement tomorrow. He posted this yesterday. So we've got the opening statement here. And what does Gensler say, guys? I have the statement here. It is a PDF. He talks a little bit about his history, some personal life here, his upbringing. But I think most importantly, he touches on the fact that, the United States of America is a great country with a robust economy, and we have to keep it that way. He says, I'm going to just go down here. I'm a product of a working family. Neither of my parents went to college, but my father was able to take his mustering out pay from World War II and start a small business that would eventually send my 4 siblings and me to college. That is the kind of economic opportunity that would be available to each and every American, no matter who they are. I believe our markets are essential to providing that opportunity. That's because capital markets touch every part of our economy, either enable businesses to develop new products, build new facilities, and grow their payrolls. They help working families save for retirement and invest in their children's futures. And although it may not seem intuitive when someone goes to take out a mortgage or open a credit card, our capital markets are on the other side of those transactions as well. Just speaking broadly about the economy, here's what I thought was interesting, though. We cannot take any of this for granted. Markets and technology are always changing. Our rules have to change along with them. In my current role as an MIT professor, I research and teach on the intersection of technology and finance. And guys, I don't know if you caught some videos that I've done in the past with Gary Gensler, specifically from MIT lectures talking about Ripple and XRP. That technology that he's talking about is the exact type of technology that he mentions here. So I believe financial technology can be a powerful force for good, but only if we continue to harness the core values of the SEC in service of investors, issuers, and the public. So essentially, Gary Gensler, technology forward. He does know a lot about Ripple and XRP. I know he has said, though, that XRP, from his point of view, is an unregistered security. But he did mention also this in relation to the SEC lawsuit, obviously, that it was up to the courts to decide how they were going to pursue the matter with Ripple and XRP. So an interesting note note there from Gary Gensler, obviously technology forward in his approach, and hoping that he's going to make a change and that markets and the United States economy will modernize over time. Not only do we have that, guys, I saw this from TEHOLBEDDICXRP on Twitter, acting SEC Chairman Commissioner Hester Peirce 100% making the case for Ripple. And let me read you guys a little bit of this. These were Hester Peirce's opening remarks from the Fintech panel at the Institute of International Bankers 2021 annual Washington conference that just happened yesterday. So here's the whole spiel here. TEHOLBEDDIC actually links the entire article here with screen grabs. And the article is here as well if you guys want to catch that. I'll link all this in the description. I don't want to go over all of it because it is quite lengthy, but I do want to make a point to highlight some of what Hester Peirce says about her role at the SEC and cryptocurrencies and how it intertwines with legacy systems. And it's actually quite funny here. She likens the legacy financial systems to her dogs that have just been kind of managing in their own little bubble, calling them these tiny shrimps that live in a perfectly self-sustaining sealed globe environment. The shrimps swim around and do not seem to know how much they are missing on the outside. So then shifting over to actually talking about shrimp, much like my adorable shrimp, the legacy financial system runs the risk of being sealed in a world of its own, untouched by technological innovation and new approaches to serving clients. The stakes are higher, of course, than for the shrimp, who candidly look quite content in their tiny globe. The risk that financial institutions will cut themselves off from the most innovative parts of the economy arises for a number of reasons that I will touch on briefly today. And so she does touch on them. She talks about legacy systems in general. So as an example, I'm just going to throw it out there, the old SWIFT system. First, much of the legacy financial system is treating fintech as a threat rather than an opportunity. A few weeks ago, I read a Financial Times article discussing how certain bank lobbyists and executives are pushing for tougher regulation under the new administration to neutralize fintech startups and to provide the more established financial institutions an edge over competitors, both big and small. Now, guys, I did a video yesterday, I'll link it up here in the top right-hand corner, with that bill that was introduced only 6 days before the SEC decided to throw down and drop that lawsuit against Ripple and XRP. This is exactly the kind of thing that Bearable Guy was warning us about. There are going to be legacy players that don't want to relinquish power, and these new fintechs are a threat to them. Obviously, the technology is better, and so what do? They are trying to gum up the gears with these arguments that, well, these guys do not fit within the regulatory system that we have. We regulators, with our own skepticism of new ways of doing things, are frequent facilitators of these efforts. Our reluctance to accommodate innovators comes from an understandable fear of bad consequences that are difficult to foresee and prevent, legal complexities around fitting new technology into existing regulatory frameworks, and the comfort we have in our repeat dealings with an unchanging set of regulatory incumbents. New entrants should not get a free pass on regulation, but regulation should not be used as a way to prevent them from competing. I think that is a really forward-thinking and amazing statement here we're hearing from Hester Peirce. Just going to briefly go over these next few things. So a second potential threat of the dynamism of the legacy financial industry and its ability to interact with the most innovative parts of the economy is the government's use of the financial industry to achieve policy ends. Third here, and relation concern, is that when the link between government and regulated financial institutions becomes too close, people will avoid dealing with regulated financial institutions. So she brings up some really great points here, guys. I'm just flying through them because I wanted to get to this. A fourth issue that may be driving a wedge between legacy financial institutions and innovation is the lack of regulatory clarity around fintech, and this is what Ripple has been complaining about this entire time. While regulatory uncertainty matters for everyone, a startup can pick up and move to another jurisdiction with a clear rule set. The global nature of these markets can complicate efforts to escape any particular jurisdiction's regulation, but it may be feasible for a small startup to do so. A legacy financial institution with a large U.S. footprint is less able to avoid U.S. regulations and more cognizant of high stakes and failing to abide by the rules. So regulatory clarity is of particular importance to financial institutions seeking to participate in fintech. And then she goes into the clarity surrounding crypto, which is becoming a larger problem as legal financial institutions seek to interact with and give their clients on-ramps to this sector. The SEC has been slow to provide regulatory certainty on a host of crypto-related issues, including when a sale of digital assets will be treated as a security offering and when digital assets sold in a security offering can trade without being subject to securities laws. And this is what we're seeing currently with Ripple and XRP. Both for digital asset securities and for digital assets that are not securities, we need to provide clarity that are registered entities about how they can interact with these assets. We took an important but limited step in the right direction last December when the Commission issued temporary relief and request for comment regarding the custody of digital asset securities by broker-dealers. Another area where we can provide an entry point for institutions looking to engage with crypto on their own behalf and that of their clients is through the approval of a Bitcoin exchange-traded product. So she talks a little bit about that. Then she talks about Gary Gensler a little bit down here on these other issues. SEC Chairman nominee Gary Gensler will bring deep appreciation for the growth and ingenuity of the digital asset space and the need for regulatory clarity for financial institutions looking to engage with that activity to the job. The legacy financial industry can join with industry newcomers in identifying areas where regulatory clarity is needed. So it sounds as though Hester Peirce looking forward to working with Gary Gensler on the SEC Commission to be able to resolve the current situation that we're in. They both have a lot of experience working with cryptocurrencies. As we know, Hester Peirce, often referred to as Crypto Mom, and Gary Gensler has a very robust history teaching about fintech at MIT, and he knows about Ripple and XRP. It's not something that he needs to research because he's done the research already. Guys, I saw this from DJ Peter Vass. Wait, what did he say about XRP? Here's a clip that somebody put together here with Gary Gensler from various different MIT lectures. Let me play you this real quick.
In fact, what Ripple is trying to do with XRP. Ripple is a company that started as a payment messaging service to compete with SWIFT. In 2018, they rolled out a prototype of using a crypto token, XRP, as a bridge currency. Bitcoin XRP to fiat, and XRP believes they have a solution that can be down to seconds. Ripple has been a catalyst for SWIFT. US dollars to Bitcoin or XRP, but this simple diagram is a big part of what Ripple is trying to create with XRapid. In Ripple's case, they try to build into the application. It's about the token XRP and whether I think it's a non-compliant security. I've spoken publicly. Yes, I do think it's a non-compliant security.
So there you guys have it. Gary Gensler, at the end of the day, does believe that XRP is a non-compliant security. He's also gone on record and said that it's going to be up to the courts to decide. Ultimately, though, he does understand how Ripple and XRP are going to work in the ecosystem, and obviously Hester Peirce has that knowledge as well. This, to me, guys, sounds like a match made in SEC heaven, but I want to hear what you guys think. Please subscribe to the channel. We got to reach 70,000 by March 31st. I'm giving away 2 ledgers, so subscribe to the channel if you want to be eligible to win. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.